Welcome to another episode of Kiss My Assets.
The transparency, the openness, the communication is more than you could expect. I'm sold.
Don't let the fact that you don't know something or don't know enough about something hold you back.
I knew I wanted to invest. What better way to invest than to invest in what I already know that I love, which is real estate.
It was initially the 12% return, but it quickly turned into the people.
Hello, everyone. I'm Heidi Butler, and welcome to our Q3 2023 Investor Livestream. Questions will be answered at the end of the presentation. In considering the performance information discussed today, prospective investors should bear in mind that past performance is no guarantee of future results, and that there can be no assurance that projects will achieve projected results. In addition, actual future conditions may require actions that differ from those contemplated at this time, and prospective investors are cautioned not to place undue reliance on these projections. This presentation includes certain non-GAAP financial measures. Certain statements, such as believes, anticipates, plans, intends, expects, target, preferred, and words of similar import, constitute forward-looking statements. Such forward-looking statements involve known and unknown risks, uncertainties, and other factors that may cause the actual results, performance, or achievements to be materially different from any future results, performance, or achievements expressed or implied by such forward-looking statements. On this livestream, we're joined by John Kobierowski, co-founder and president of Real Estate, and Jamison Manwaring, co-founder and CEO. Before we discuss company updates in the current market, we'd like to cover some important items. Distributions are available on the 10th of each month and are found under the cash available on your investor dashboard. If you're interested in using your cash balance to invest in one of our open offerings, you can select the amount you would like to use from the cash available during the checkout process when completing your investment. You can also contact Investor Relations for assistance. We plan to host an open house in September for our Flagstaff property venture on Route 66. Keep an eye out for the details and RSVP link in the coming weeks, and come enjoy the cool weather while touring this beautiful property. It's important for us to connect with our investors. We want to keep you informed on the important items in the news, the progress of our projects, and investor events. You can follow us on any of your preferred social media platforms to stay up to date on what's happening at Neighborhood Ventures. Our podcast, Kiss My Assets, is one of our favorite ways to discuss multifamily trends and delve into other relevant topics that we feel are important to our investors. We really enjoy having our investors come into the studio and share with us their stories. If you would be interested in joining us for an episode of Investor Stories, reach out to our investor relations team. Now I'll turn it over to Jamison.
Hello, everyone, and thank you for joining us. I wanted to begin by discussing what we are seeing in the current housing and multifamily markets, and our plans for the remainder of 2023. As you have probably seen from the many news articles, very few homes are available for sale. Home sellers are not selling because they have low fixed interest rates on their loans. A similar scenario is happening with apartment buildings. Very few transactions are occurring due to tight credit conditions and higher interest rates. Because of this, we do not plan to sell any of our projects this year. Instead, we plan to focus on the management and operations of these buildings to ensure they continue to generate strong cash flow. We will discuss the performance of each of these projects in a few moments. Additionally, we will continue to be opportunistic as we look for new projects. As we often say, in real estate, you make your profit at the purchase. So we are constantly monitoring properties that become available both on and off the market, and we are ready to act quickly when we find great deals. One example of this is our most recent acquisition venture on 36th Street. When this property was presented to us, we knew that the price would be very attractive, but the seller needed to close quickly. Thanks to your support, we were able to raise the funds needed, and we closed in less than 30 days. So far, our venture on 36th Street has raised over $1.3 million from 125 Arizona investors. The offering is still open for investment, and we will begin renovations next week. We are thrilled with the national response to NV REIT, an SEC qualified Reg A offering that we launched at the beginning of this year, and is now paying a 5% annual cash distribution each month. NV REIT welcomes both accredited and non-accredited investors. It is unique in that it offers both immediate cash flow and long-term appreciation. All investments received by the 27th of this month will see their first distribution on August 10th. Each quarter, we will update the value of NV REIT shares. This is done by taking the total value of the assets held by the REIT and dividing this by the number of shares outstanding. Our first acquisition, Venture on Williams, occurred in February. And as of the end of Q2 2023, the current net asset value share price is $100 a share. One of the most popular features available to our NV REIT investors is Auto Invest. With Auto Invest, you can opt in to have automatic investments occur each month. Additionally, current investors can also select our reinvest option and have their monthly dividends automatically used to purchase additional shares. Our investor relations team is available to help you enroll in these options. Now I will turn it over to John to discuss his thoughts on the multifamily market and what our strategy is going forward.
Thanks, Jamison. As we discussed before, Arizona continues to see tremendous job growth and in-migration, adding to the current housing deficit that already exists. Arizona is in desperate need of more housing. The inventory of available single-family homes is at an all-time low. The high mortgage interest rates combined with the lack of housing supply has resulted in an increased need for multifamily properties to accommodate the population growth. The millennial preference for renting versus buying adds additional demand for high-quality multifamily properties. We are seeing limited transactions in the multifamily market. Multifamily property owners currently have few incentives to sell. However, properties are profitable and run high occupancy, as we have seen in our own projects. With few properties available to purchase, this gives us an excellent opportunity to share with our investors how we find deals in this tight market. We are experts at finding the diamond in the rough. Our criteria when selecting a project that is right for Neighborhood Ventures and our valued investors consists of properties that are located in up-and-coming core neighborhoods. We target properties in areas that are beginning to see early stages of investment and redevelopment, small to medium-sized buildings, 10 to 200 units, because these buildings have less competition from large institutional buyers. They are often not professionally managed. Better management results in high cash flow and property appreciation. Properties where the current rent is below the market rent for the area. We use intelligent renovations, including updated kitchens, bathrooms, fixtures, added amenities, and up the rents to the market rate. We're willing to be patient, moving forward on deals that only align with our investment standards and strategies. We remain confident in the strength of the Arizona multifamily market and our ability to offer projects that our investors will be excited to participate in. Now let me shift to our current projects. Recently, 3 of our properties completed renovations and entered the stabilization phase. We are grateful to our skilled and dedicated construction team and our in-house designer who works so diligently to transform these projects into beautiful, quality housing. Their hard work and expertise are an integral part of how we confidently bring formerly underperforming properties up to market rate. First up is Venture on 12th Place. We are so proud to show off this property's stunning transformation at the open house last month. Both current and curious investors joined us for coffee and donuts and were able to tour the newly renovated units. The property is now open for tenants and is already over 50% leased. As an example, the market rent for the townhouse-style units is over $1,725 per unit per month, a healthy increase from the average rent of less than $1,200 prior to the acquisition. We expect Venture on 12th Place to cash flow in Q4 of this year. Flagstaff's Venture on Route 66 is operating as a vacation rental and has been welcoming guests eager to escape the summer heat since last month. All units are beautifully furnished and fully renovated. We hope you'll join us for the upcoming open house in September. We expect Venture on 66 to reach the cash flowing stage this fall. Our first and only retail project, Venture on Broadway's renovations are now complete, with Dunkin' Donuts up and running. Stop by for a coffee and donut if you're in the area. We are also pleased with the increased interest in the available space, and we are in the process of selecting a third tenant. With Dunkin' Donuts completion, we are excited with the quality potential tenants that are interested in this suite. Jamison?
Because Venture on 17th required no renovations and was already near full occupancy, it was able to begin paying distributions this month. Investors will see their first distribution on August 10th. We are anticipating strong occupancy and rents over $2,000 per unit. Venture on Central is 100% occupied, and we are renewing leases at rates over $2,100 per unit, a significant increase from pre-renovation rents of $1,000 per unit. We plan to increase rents to the market rate as they renew. We expect Venture on Central to be cash flowing later this year. Each of our cash flowing properties pays investors a 6% annual distribution. Venture on Eldon is currently 100% occupied. The current average rent is over $1,900 per unit, more than double the original average rent. Venture on Mountain View is currently 85% occupied. The units are leasing for over $1,100 per unit for the 1 bedrooms and $1,300 for the 2 bedrooms. Venture on Country Club is operating as a short-term rental and is performing well. Although we have seen some delays, we have recently seen significant progress in the rezoning process to convert the property to a long-term rental. We submitted our complete plans to the city several weeks ago. This occurred after months of detailed and constructive conversations with the city and our team of attorneys and architects. Over the next several months, we will have additional meetings with the planning department, and there will also be upcoming city events that investors can attend to show their support for the project. We will keep you informed as these events occur.
Thank you so much, John and Jamison. We really appreciate all your insights. The first question we have is in regards to the REIT. What are the current assets that the REIT holds, and what is the plan for the next acquisition?
So we launched the REIT in February. We have one property that we hold right now, Venture on Williams. And as we mentioned in the presentation and other places about the REIT, it only holds cash flowing assets. And so it's nice because you get that distribution on a monthly basis, and we expect future upside as well as the property appreciates. So we're assessing right now the different opportunities for the REIT to acquire its next property. We're very selective. I would expect we will probably do that either by the end of the year or first of the year. We'll announce the second project.
Another investor asked, do we have more details on when the Route 66 event will take place?
We were considering doing that. Somebody knows we're considering doing August, but it looks like this heat is not slowing down. So for that, plus we also are really in a very busy season up there for some of our rentals. So I think we're pushing it to September. That way, if you go up there, you're actually going to enjoy it. It's not going to be 100 degrees up there. And then we can have maybe a little bit of a reprieve in some of the guests, so we can actually show you a unit up there. So sometime September is what we're planning for now.
Great, thank you. Another question we received is, as you mentioned, the market is slowing down. Do you have an estimate on how many more properties you will acquire in Arizona this year?
When I say we talk about market slowing down, real estate market's actually doing very, very well. It's just the amount of available product, the number of people who want to sell is stopped for all intents and purposes. Transaction volume is way down. So we are diligently evaluating properties every single day. We get properties brought to us, whether being a full purchase, being the equity in something, looking at development, all kinds of opportunities. And we're just trying to figure out what makes sense in this environment and for our team and fit into our strategies.
The big change is, just like with the single family home market, there's just not much available because people who are operating apartments, they're looking at the environment and they're saying, I'm going to wait before I want to sell this. So we're patient. We're not overly aggressive. And the proof's kind of in the pudding, because this year we've had 2 great projects that we've brought to our investors. One of them was the townhouses that were, beautiful 3-bed, 2-bath townhouses. The seller was in a little bit of a pickle and needed us to act quick, and we were able to act quick and purchase it. And now we're operating the property. Our property management team's on it, and and we have a great asset that we bought for under the market. And then our more recent one on 36th Street, little similar situation where the seller passed away, prior owner passed away, his heirs inherited it, wanted to it wasn't their thing, and so we were able to come in. And so those are the types of transactions we're seeing. They're a little bit one-off, and we've already done 2 this year. So I would expect we might do another 1 or 2 this year. But John, he said this in a meeting with an investor earlier today. We don't have a mandate. We more we don't have a mandate for how many projects we need to do. It's more of finding great projects that meet our criteria, and then we act.
Another investor, Rick, asked, will the REIT be purchasing properties held by Neighborhood Ventures?
So the REIT will acquire properties that were prior properties that were owned and crowdfunded. But then once that transaction occurs, it's owned by the REIT. So let me just talk a little bit about why we do this. We've now done 15 projects. We've sold 5 of them. And as we've sold them, John and I both looked at each other and said, it would be great if we could hold these for a little longer. There's a little bit more juice in this.
A lot of
This
seller
property.
remorse, folks.
Yeah.
We've done some great jobs on these buildings, and we sold them to help generate cash flow and do things, and that's what we had to do. But if we didn't, there are definitely some projects we sold that I would have rather have held because they're in great locations and done right.
And our investors kind of said the same thing,
Yeah.
that it would be great to have the option to stay in that project. So as we take projects through our process, we renovate them, we get them stabilized, we get them generating cash flow. Some of them, and most of them will still be sold, but the ones that we really like, that we identify that have characteristics that we think are going to continue to outperform, those are the ones the REIT can come in, purchase out the equity, and hold for another several years. And our first project, Venture on Williams, once we launched that, and that was one of the when we launched that originally, the equity sold out in like 24 hours. And then we had a couple investors actually message us and said, hey, when you sell this, would be interested in buying it, because it's a really cool building with the architecture, large 2-bedroom units in a really nice part of developing Mesa. So as we got to the point where we were ready to sell that, we decided that this is the type of project that the REIT would like to hold, and that's why we moved on that one.
And let's just add the last point. There's a chance that we would buy a project just for the REIT. Definitely. The problem is we need to find something that's cash flowing, stable, that we feel very comfortable with. And most times, like Jamison said about in our last comment about some of the projects, most times we're stepping in to fix an issue on the property, and that's how we create value. So we only want to put stabilized cash flowing assets into the REIT.
Okay, so we've got 2 investors and asking similar questions. First one from Jay says, will Venture on Broadway be sold this year? And if so, is it a possibility to sell to NV REIT? And then another investor asked, is Dunkin' Donuts in that project, which is Venture on Broadway, under leases with Neighborhood Ventures? And if so, why sit on it and not sell the property?
Yeah, we'll both tackle that because
Sure.
we talk a lot about managing each of these assets, and we're excited that Dunkin' has moved in. They've signed a 10-year lease. Every time I've gone by there, they're super busy. They have a great drive-through, double lane drive-through. And then our other tenant who's in there also has a drive-through, Burger Rush. And so now the project, it's moved a little slower than we hoped. It took us 3 times longer than we hoped to get these city approvals through, and including during COVID, including the drive-through. And anybody can ask you who was in the development world, to get a drive-through approved right now takes a long time. The city's very sensitive to drive-throughs because of the backup that happens in the city streets, because the busy drive-throughs. If I don't know if folks have seen this, but if it's a busy drive-through and now you have 5 cars in the street slowing the street down, so the city says, whoa, you want to put a drive-through in, we got to make sure there's place for all those cars to go. So they required us to add a double lane drive-through so that it can accommodate a dozen cars at a time. So it took longer than we thought, but now you do it right and things work out. So now we have a very happy tenant, very busy store. And we mentioned in the prior script that Since Duncan has opened up, we've now started to see a lot of activity on the third space. We're in the process of deciding who that tenant will be.
We
Um,
have, and just so we can tell you, we got multiple LOIs, multiple offers for that space for lease.
Yeah.
Yep.
And we're in the process of negotiating back and forth, figuring out which one will be the best. That will be the next stage. And then the next thing for investors is we will start paying distributions. We don't want to sell the building at a time that is not optimal to sell it. And right now is not an optimal time to sell a building like that or an apartment building. Not because the value has come down, but just because the buyers on the other side, there's some restraints, including the fact that the capital is a little slow right now. And this is a cyclical thing where, I'll pass it over to John. He can add to it, but to get lending on a building right now is a little more challenging because we saw the banks that failed, SVB and these other regional banks, and a lot of times they're the ones who lend. So even though there's ways to get credit, to get debt, that is a little more muddled right now. And so, it's not a thing that we expect to happen to that we're going to be in for years. This is a period of months. Maybe it's 6 months, maybe it's 8 months, maybe it's 4 months. But right now, we don't want to put an asset that's a great asset and sell it for less than the optimal price.
Right.
And
So,
John, as you're going to go into this, I'm going to ask another question with it because this will answer them both.
sure.
If there are no apartment complexes for sale, isn't that the ideal time to sell some of the current holdings?
Okay. So let me answer
Yeah,
the
let's
Broadway,
ans- yeah, let's
Broadway part. So there's two parts to the reason why we might not sell Broadway right now. One of them is we don't have a third tenant, and we get our biggest bump in value once we have our third tenant lease negotiated, signed, and effectively moved in. Now, in residential world, that's 30 days. In commercial world, with build out stuff they're doing, it could be 90 days, 120 days. So that's one of those big considerations. And as Jamison said, one of the other things is in my experience, there's always financing for multifamily, be it today not the most attractive interest rates, but on retail, there's not as much. So we're conscious of that. But once we have that third tenant in there, we can make a much better assessment of where we're going to be. And we're close to figuring out how that's going to work. As far as selling, this is a very interesting time in history. If anybody follows the U.S. Treasuries, they call it an inverted yield curve, where the 10-year Treasury is at 3.8, but the 3-year Treasury is at 4.5. Doesn't make any sense. In a single-family home market, we have the least number of homes on the market and the most amount of people looking for homes, yet nobody wants to sell. And interest rates are high and values haven't moved a bit. So it's like this funky inverted yield curve we're dealing with right now. We have some people that want to buy, but they're not super aggressive. We have less people that want to sell, and the banks that don't really want to lend, even though we do have other alternative bridge debt, Fannie, Freddie, things like that. So the answer is we're just in a weird spot right now. And based on what happened with the Federal Reserve today, maybe we're going to get some more clarity and it'll create some more stability in the market. The fact that it looks like they're going to hold, they went up a bit in rates, but they're going to hold it. But yeah, the answer would normally would be, yeah, less product supply, more demand. That's not what's going on. It's a very funky thing.
And so, just to piggyback on that, so with Broadway, if you're a Broadway investor or an investor in any of our projects, you're getting a 12% preferred return, and that's continuing right now. And so if we sell the property in 6 months or in 8 months, they're earning that 12% throughout that period. And so we, as the general partner and managing these projects, we're assessing when is the best time to sell to ensure that we get the highest amount of value. But as an investor, you're earning that no matter what as we continue to hold the property. And then the nice thing is we should soon be able to start paying distributions on Broadway. We haven't been able to, and we wanted to earlier, but we're conservative. So unless money's coming in, and now we have 2 tenants, we are easily paying the debt on the building, the monthly debt service, and the expenses. We want to wait till that third tenant comes in, and then we'll start paying distributions. And then and that's kind of the next thing to happen. But it did take a little longer than we expected. And Broadway was a 2-year project, and we probably should have done it a 3-year to give us a little bit more time. We did it 2 years. So that one we do need a little bit more time for the value to happen.
Play itself out.
Yeah.
Yeah.
Okay, so our next question is about Venture on 36. Can you give us some more insight about the renovation schedule for this property? And will NV REIT end up acquiring the property at the end?
So the answer to the last question, we don't know. It's a great project, but we want to see how it stabilizes and how everything's going to work on it. As far as renovations, we've already started. I was out there yesterday and our crew is already painting the property now. First of the month, which is just this next week, we have a whole group of residents whose leases are up that before we acquired the property, notices were given by the prior owner. So we're going to be able to get into a significant number of units, and our guys are going to get working. So we're actually moving very, very quickly on that property.
Kat asks, can you share more details about Venture on Country Club and the transitioning from short-term to long-term rentals?
I was on a hearing, on a Zoom call yesterday with our attorneys, zoning attorneys, and our architect, and we were recapping a meeting they had the prior week with the City of Mesa staff, and very solid, positive communication, and came down to just a few last items now. We're going to be having a few events coming up that are city required, and then also some city council meeting hearings that I think we'd like to have some of our people show up and support. They're going to be helpful to have them at the council meeting. And so we are on a very positive track there. I think the best track I've seen for a while. And all of our entire team involved there is excited to see us going down this road now. So I don't have a definite date. These things, city council meeting hearings and getting things on the agenda and things like that are not in my control, but I can tell you we're on that track.
Our property manager who is there is chomping at the bit to have this as a apartment building because there's such demand in that area for affordable housing. So these will be folks who can move into a 1-bedroom that has full utilities paid, and you're looking at probably $1,250, $1,300 per unit. Pool, nice amenities, gym on site. It's kind of unheard of, and there's a big need for more of that housing. I think most of us see this. So we're excited that once we get that to happen, there'll be a really quick lease up on these units. We also know the city, we may get some incentives from the city to do some of that because there is such a shortage. So
Correct.
It's going to be an exciting time. Real estate. One thing that I've learned I have John's been doing this a lot longer than me, but one thing I've learned is, if you're patient, you're rewarded. And that's the case of Country Club as well.
Yeah, but I'll just tell you, we're on a very good track. I was smiling yesterday afternoon when I got off that call, and we have a few minor items to address with the city right now with some questions that came back. And we want people to be involved as they can. It helps us on the project, and we'll let you know when those meetings are coming up.
And that's going to lead to the next question. Do you feel like you have the city's support in making this transition from a hotel to long-term rentals?
Yes. Yeah. And that's pretty evident now. They understand the value of this, they understand what we're doing and why we're doing it. Not only do we have the city staff support, we also have the neighborhood support, and have had it the whole time.
Another question we have from Dan, one of our investors. Any plans for an open house at Broadway?
We've kind of decided, well, I'll just say definitively, I don't think we're going to do an open house at Broadway. We went out there a few times and walked the property, and it just didn't seem like it'd be a conducive environment in the kind of a commercial atmosphere. Yeah. Now it's a little different when you can go into an apartment building that's just been completed and we can stay in the courtyard. So we decided, especially in the summer months, it's not the best idea. But what we do want to do is tell you to go by there. It looks beautiful. Go through the drive-through, get a burger at Burger Rush, get a donut at Dunkin' Donuts, and what else do you need?
Yeah, that was my comment. I actually said, "What are we to stand around an empty parking lot in the sun and give each other high fives?"
Right.
So, folks, I didn't mean to take that away from you. It just felt kind of weird to say, "Show up and yep, that's Dunkin'. There's Burger Rush. Here's the empty space, and see ya."
And it's open for investors to go look at it. So
Yeah.
With an apartment building, you need to have somebody open the door and go look at it. Here, they're open, so go check them out, and we hope you'll support the tenants who are there.
Our next question from an investor is: you acquired Venture on 17th and Venture on 36 around the same time. Very different properties. Why did you choose both of those?
Again, we're looking at things that make sense for us based on what's being offered to us in the market. Venture on 17th, Jamison just said, really nice property. We couldn't build that today for what we bought it for. The seller had a loan coming due, and we were able to step in right away and take that down. And I'm very happy with that. And then 36th Street popped up. Quite honestly, we looked at each other and said, we just bought one building. Are we ready to buy another one? But it was such a unique situation. We got it for a really good price. And we've been patted on the back by quite a few more sophisticated investors who said, how'd you get it for that deal? So it was one of those things that we appreciate everybody's support because we had to do two projects quickly. I hope we continue to find good deals like that. That's what it's all about.
Another question then with 36, is it still open for fundraising? If so, how much are you hoping to raise?
I think our maximum on that is 1.7 million or 1.8 million. It's somewhere in that range. I think we're over 1.3 million. So we've been able to acquire the building. We're moving forward. And the nice thing is you can still invest in it. And if you're a national investor and you're not in Arizona, you can invest in it via the REIT. So the REIT will also invest in that passively, a small portion. So everyone can participate, and we're still fundraising on that.
And that leads to a great part of my next question. We had an investor say, I've loved investing with you guys and always try to recommend you to my family out of state. Any advice or things you would mention to out of state investors who you want to participate in the REIT?
It's kind of simple. When you invest in anything, you need to understand what you're investing in. And what you're investing in with Neighborhood Ventures is housing. It's multifamily. It's projects that we're taking from here to here, and we're taking the cash flow from where it is to a higher level. We have a deep expertise in that area. And we stay in our wheelhouse. There's plenty of opportunities for us to just continue doing that. And so when you invest in the REIT, the great thing is you're going to benefit from appreciation over time. 80% of the property appreciation gets passed on to investors. So if you think about that over a 10-year period, real estate, I think, will do really well over the next 10 years. And to be able to invest in something passively, not have to be the landlord, and get 80% of that upside is really compelling, I think. And that's what I would talk about. If I'm talking to a family member, you don't have to do anything. We'll do the dirty work, so to speak, and you can benefit and get that mailbox money every month that comes straight to your account.
Thank you. And I'd also recommend checking out on our website. We have a plethora of resources available on NV REIT specifically if you're looking for it. One person, Kat, just sent this one over, said, we've been happy to be a part of several of the projects and we appreciate the expertise of this team. We hadn't considered the REIT, but now after listening to some of this, we're reconsidering and we'll look into the details. So thank you, Kat.
Yeah.
A lot of times you start out with an individual project as an investor, and we've seen this several times with investors who we've had conversations with. And it's fun to follow that specific project. And then you invest in that one, you invest in the next one, and you might get 4 or 5. And then it kind of gets a little complicated to keep track of all of it. And the nice thing about the REIT is you'll be investing in many of our projects with one investment. So it's a little bit more simple.
And one tax document at the end of the year.
And one tax document at the end of the year. You know that because that's you're already working on those for this year. So, but you get a pick. Sometimes it's fun to say, I have ownership in this building, and you know exactly where it is, and you can do that with us also. And with the REIT, it's a little bit more diversified because it's a pool. We're expecting it'll be about 10 properties at the end.
Do you plan to hold any of the properties outside of Arizona or just stay in Arizona for those properties?
Right now, my favorite phrase is, thank goodness we're in Arizona.
But it's 115 right now.
It's 117 maybe, but the hard part about looking outside the state is as you make that jump, you have to have all those resources to make that jump. And for us to move our construction people and get things, and it's not like any market out there is really outperforming Arizona. There are some markets in Texas which are doing okay, but it requires, again, a lot of logistics to move to take care of it. So by the time you factor that in, it might not be as profitable for us. Some properties in Florida, but each one of those markets brings other issues that we haven't even got into, like insurance and tax issues and all kinds of things. So at the moment, we have a very deep understanding of our market here in Arizona. The market's in our favor. We have strong occupancy. We have great rent increases. We have a great pipeline of the very few deals that are popping up. Um, this is really where we need to be playing right now while the market's like this. And if we do see opportunities open up and we can assess it in such a way where we can figure out how it makes sense for us to chase those other markets, I'm in. I understand a lot of the markets around Arizona. I understand a lot of markets outside of Arizona. So we're ready to go. But we just want to make sure we're smart about it.
And on the portal, if you go to the NV REIT portal information, we have a map of the states we've identified that are key states where we expect to see growth in population, growth in income. Arizona is definitely the prime target. Other markets, kind of like Arizona, John mentioned a few of them. And those are the markets we've identified for investors that we plan to buy property in if we ever go outside of Arizona. And I think we will over time. We both kind of agree on that, but we're going to do it at the right time. And to John's point, having deep industry knowledge when times are interesting is super important right now. What we're focused on right now is operating our properties really well so that they keep generating cash flow. We keep collecting rent. We keep our bills down. And that's super important. And if we ever go to another market, we're going to bring that same level of expertise and focus on operations there. So we'll do it at the appropriate.
Got to jump in with 2 feet, folks. You can't just goof around on another market.
Yep.
Another question we have here: does the auto invest option pull from a cash distribution? Can you explain the difference between auto investing in the REIT and reinvesting in the REIT?
Yeah. So auto investing is, I won't point out the person who inspired this, but I have a family member who said, I'm going to start putting $100 a month. It comes out automatically into some app. And it was like investing in stocks. And this was some time ago. And the nice thing about it is with auto invest, it just kind of pulls that money out, puts it away for you on an automatic basis. And that's what auto invest does. You can set that up. It comes out on the 15th of the month. That's probably more for a starter investor or somebody who says, I want to put $1,000 a month. That's a little bit more aggressive, probably come out on the 15th. And it's kind of like, you don't even think about it. It just comes out. The second option is to do what's called reinvesting. And this is when you compound your earnings and reinvest them. And anyone who has looked at the power of compound interest knows that if you're trying to build that wealth up, you want to reinvest all your earnings and buy more shares, because as that compounds, there's an exponential impact. So auto invest, you can kind of think of it is that automatic thing that just comes out every month out of your account. Reinvest is taking your distributions and reinvesting in additional shares.
Another question, maybe just a clarification. Sebastian asked, I received a notice for the open house for Route 66 on August 5th. Can you just reconfirm that's now going to be in September?
Yeah. Sorry. I'm sorry about that, folks. We didn't know that we're going to have 26 to 30 straight days of 117-degree weather in Arizona.
And it's also in Flagstaff.
And as I say, Flagstaff is in the high 90s up to 100 degrees. So we just made a decision. It's first of all, it might not even be safe for a lot of us to be driving up there. Some of our investors are driving all the way up there 2 hours in this heat. So we just said, let's wait for it to cool off. And that's that. Jamison and I both made that decision. So we sent that out before we realized what kind of weather we're going to be having.
Yeah. And we had an open house at our Eldon property. Was it last summer?
Yeah.
I think it was last summer. And it was really fun because a lot of people came from Arizona dealing with 110 and got up there and it was 80 degrees. And that's kind of what we want to have happen this time. But we had some folks who were up there. John goes up there quite a bit and it's still over 100 up there. So there's not the relief that we wanted. So we're hoping here in a few weeks that changes and then we'll have the event.
You know, it's amazing though. We put air conditioning in every one of our properties.
Yeah.
And that's very unique up there. So, I mean, our tenants are, I'm hearing from our property manager, our tenants are like, We love it.
Yeah, and Eldon is performing really well up there. It's full, so.
Yeah, with air conditioners.
Our next question is, REIT investors, do they get a K-1 or a 1099, or is it something else?
1099. It's one thing that's a little different with a REIT versus investing in an individual project is that you get a 1099. It's a little simpler tax form. They're about the same to me, but I think accountants prefer 1099s.
Great. Dan asks, would you consider building a project from ground up as part of a neighborhood ventures project? And then would you ever put it in the REIT?
Yes and yes. However, I won't go into the detailed explanation, but at the moment, there's the outside value of a property after we renovate it, or sorry, build it in this market is hard to determine right now. So the short answer is we were really excited to build going into this year. We started identifying sites, talking to lenders. We even met with a few GCs that are building these projects. But then we started realizing very quickly that we can buy projects like 17th Avenue that are already built. We're looking at a couple other ones that are being built right now that we might be able to step into and buy
below replacement cost,
below what they build it for. So they're going to sell it at possibly even a loss. And we take zero risk in doing that. So we didn't have any of the entitlement risk, any of the loan risk, any of the construction risk, any of the materials risk. So that's the issue right now in Arizona. We just, there's no reward for building today.
Another question from Sebastian, what is the maximum amount of shares that NV REIT can issue? And then another investor asked with that, does the amount of shares you sell in NV REIT change as the NAV prices change?
No, the maximum number of shares that we can issue there is we can raise 75 million is the maximum. So divided by 100, what is that? 700. I'll probably do the math wrong in my head.
7,500,000.
So 75 million is our maximum that we can raise. And what was the second question?
Does that change the number of shares you can issue change as the NAV price changes?
No, the NAV price will increase. The maximum we can raise is 75 million. So as the NAV price increases, it will slightly bring down the number of shares that we can offer, because right now the NAV's at 100, so the math is easy. But if the NAV's 110, then it's slightly fewer shares at the very end, but it's very small.
Another investor, Eleonora, asked, wouldn't it be easier to invest in Tucson rather than going to another state?
It would be, but and don't get me wrong, I love Tucson. I think it's a fantastic place to visit, and the school's fantastic and a lot of other things about it. However, the appreciation that we see on multifamily in Tucson doesn't come close to matching what we see in the metropolitan Phoenix area
and other markets. Yeah.
And other markets, yeah. I mean, Flagstaff has got real strong appreciation. Phoenix has had it. So if we buy if you take any of our projects and drop it into Tucson, if we bought it, it would not have appreciated to the point that our projects have. And that's a big component to how we're able to pay these strong returns. We've got to have good appreciation.
All right. And this is our last question we have. Might have missed this, but when will 17th and 36th start to cash flow?
So 17th is cash flowing right now. That was one of the big benefits there, is there was no renovation work that was needed. You know, this is a new building, 2018, 2019 build. And so there's no period of time where we have to do renovation. So it's cash flowing right now. The first distribution comes out in a couple weeks. 36 will typically be about a year. We try to beat that, but we do renovate that. We are renovating all those units. There's a lot of work that's already been done there. Air conditionings have been done. It's already been individually metered from master metered. So some of the stuff has already been done, but we do need to go in and refresh those. I'm hoping it's less than a year, but we've already started renovations. So as soon as it starts generating cash flow, that cash flow goes to investors. So the first month where all the bills are paid and there's some left over, we're going to send it out.
Thank you both so much. We appreciate it.
Thanks, everybody.
Thank you.